Welcome to Energy Chat. We're going to talk about why wind energy needs subsidies and what subsidies it's had in the past. So, wind energy is from a bunch of turbines, wind turbines, spinning, generating electricity, feeding it onto the national grid. Everyone else who's connected to the national grid, that's customers, business, consumers, whatever, they use energy off the national grid. As we've gone over before, all the energy that's generated, or the electricity that's generated right now, has to be used right now. You can't store electricity. So wind energy just generates when the wind blows. So the wind can't follow what people want in terms of their energy demand. And so wind farms, basically, all energy is sold through markets, and the markets reflect the amount of energy that's available on the system at any time. And so wind basically just generates when it's windy. They have to take whatever price is available at the time. Now, there's a few ways that they do this. They don't obviously have to take it. They could just not get paid. They could turn the wind farm off. But if they want to turn the wind farm on, they have to basically sell at the market price. Now, the markets that they actually sell energy into are maybe the day-ahead market and then the intraday market, which is a market that goes all the time throughout the day. And these are all contracts to deliver energy at a certain time. But these markets essentially are they're not pay as bid. They're pay as bid, which means that whatever you offer a price, and if someone accepts it, then you get that price. And so the thing about that is that they have to basically offer a reasonable price, and the reasonable price is going to be roughly what the market price is. So what the average market price is basically the cost of all the other energy on the system. So if it's really windy and there's lots of wind energy, there's going to be lots of wind farms submitting prices in, which means that the average price is going to be quite low because the people that are asking for energy can offer a low price, and there won't be that many people asking, so people that are selling energy will have to offer a low price as well. So the average energy price goes down when it's windy because there's lots of generators generating wind energy. This means that wind farms are very susceptible to changes in the energy price during the day, which is based on wind, which means that it's called price cannibalization. When there's more wind farms, they get less pounds per megawatt, so price for energy, and therefore they see a lower average price over time as more wind farms are built. So why did they need a subsidy in the first place? Well, back in the day when there was basically no wind farms on the system, the energy price was basically dictated by what people needed, but then also which power plants were online, and that was like gas, coal, oil in some cases, and nuclear power. And so normally the wind farms would be able to get paid up to the marginal unit or the most expensive unit, but basically it was maybe £100 a megawatt hour or something. But initially, wind farms, when they were built, if you look at the levelized cost of wind energy, and that's like the total amount of wind energy generated in the lifetime of the wind farm divided by the amount of power that it's going to generate over its lifetime, that was something like £200. So it was way too expensive to be chosen in the energy markets, which meant that it would offer its prices the prices to pay for its own construction and maintenance, but it wouldn't have got chosen, so it wouldn't have got paid to do anything, so it may as well have switched off. So the first subsidies that existed were called the ROCs, the Renewable Obligation Certificate. They were brought in by the government as a form of carbon offset, essentially, to incentivize the country to force the country to generate power with lower carbon sources. And it was paid through your supplier. So you paid a levy to your supplier, and then they had to buy a certain amount of wind energy with which they got some certificates called ROCs. And the ROCs were worth about the delta between how much it actually cost to generate wind energy and the market price at the time. They're worth, I think the first ROCs were worth about £125 per megawatt. So it's about half of the overall cost that it costs to generate wind energy. And they lasted a long time, and also were bankable. So you could essentially, when you got the contract when you got a ROC agreement, you could then borrow against future ROCs. So you could basically get cash from a bank, because the bank knew that you were at least going to earn those ROCs if the project got built and was operating properly, which is high likelihood. So you were able to build wind farms on the back of these promised subsidies called ROCs. And that's why they had to be promised for a long time, like 20 years, to make sure the risk was low enough for the bank to do that. So very lucrative for wind farm developers and banks. Well, not very, but a good sort of steady source of income, maybe between 5 and 10% yield. And basically, wind farms got built, and as more and more got built in here in the Scandinavian countries and elsewhere, the skills of building wind energy got better, and the price came down. The levelized cost of energy came down and down and down to the point where they didn't need a subsidy to bring the overall cost of energy down to the market price. But what they did need was the fact that every single day, you don't know what the wind farm's going to produce, and the market prices, as we've got used to wind energy on the system, start to reflect what the wind might do based on like a national wind forecast. And so you're still kind of in a place where you could, 1 month you could make £200,000 per turbine, and the next month you could make £50,000 per turbine. So there was a lot of variability in the amount of money you could make, because it was always based on the market prices, the wind farm availability, and the wind, which could be higher or lower than average for that month. And this is a problem for people who own and operate wind farms, because they're cash poor businesses. They don't have a lot of cash buffer. They would normally borrow money to build, and they pay a loan back over the lifetime of a wind farm, and they would take their profit as the difference between the loan payments and what they made operating the farm. And so people who own and operate wind farms and trade the power are often very cash poor, which means they can't sustain like very variable incomes from month to month. And so a new kind of subsidy was brought in. At this point, wind farms on a levelized cost, so like the average cost of wind energy, was well within the normal amounts of market, normal prices in the energy market. So we didn't need the ROC subsidy anymore. We did need a new subsidy which accounted for the fact that the income was variable. And you could think of this as a sort of top-up payment. And so if the wind farm was earning not much money in 1 month, then it was the government that would took the other side of this. They would pay the wind farm. And if the wind farm earned more than average in another month, then the wind farm would pay the government. And so what the government essentially does is put some money aside as a buffer to smooth out the earnings of wind farms. And actually, because these agreements, again, lasted for sometimes 15 years, the government actually takes a bet that the prices will go up for energy. And the wind farm decides what price it's okay with taking for the 15 years, and that's the strike price of the subsidies, called a contract for difference, CFD. And the wind farm decides what price they want to take, and then over 15 years, if the power price significantly increases, then the wind farm is going to be paying a lot of those increased prices back to the government. So the government might make money on a CFD over 15 years. But the CFD is paid for, again, through your bills. It's like a small levy on top of your bill, maybe 1 or 2 pence per kilowatt hour. So it's like 3-4% of your actual bill. So it's not nothing. But again, it's a subsidy provided by the government to help wind farms trade. And they've been offered over the last 10 years in lots of different auction rounds, and plenty of wind farms that exist today were built purely on the basis of having a CFD. So most power plants now actually can bid in for CFDs. They're kind of grouped together in different allocation rounds for different power plant types, so they're not competing like wind versus solar or whatever. Sometimes they are, but often they're not. And the government decides how much energy we want, and then decides how many subsidies we want to offer, and then offers that up to the market. And and then the market basically allocates CFDs are offered in like closed auction rounds. So all the developers that want to build a wind farm, or if you've got an existing power plant and you want a CFD for it, then they offer their strike price in a closed envelope. If it's not built yet, you have to submit details of who you're going to build it with, who's going to be the engineers, so the government can have an idea of the project risk, and then they basically choose a few projects to grant CFDs to, and those projects can then go to the bank and borrow to build the project, and the bank knows that the wind farm owners have got a fairly reliable source of income, because whatever they generate, they're going to get a fixed price for. So assuming that the wind farm generates a normal amount of energy, they're going to get a fixed price for that per unit, and then they can use that to pay the bank back. So there's low risk for the bank again. Not quite as low risk as the ROCs, but still low risk. And then the wind farm gets built, developers get paid, and the government essentially is subsidising the build out of renewables through a few pence on your bill. Now the next phase of CFDs is going to be corporate CFDs, where corporations take on the responsibility of the government, and they use their own bank accounts to smooth out the trading from month to month of trading renewable power. And in doing so, enable wind farms to get built, because you need that certainty of income in order to get a loan to build. So because of that, corporations would sponsor, essentially, by providing a corporate CFD to a wind farm project, and then they would get the benefit of being able to say that they allowed that wind farm to exist, and they get a carbon credit as a certificate per unit of energy that wind farm generates, and they can say that they've offset their carbon emissions because they allowed a wind farm to be built at a cost to themselves, because it's not free. They have to put money aside, and that money could have been invested on their behalf, and therefore there's a sort of risk-free rate that they have to compare against. They're losing money by keeping money just in maybe a money market account, easy access. They could have built a new store, they could have built this, that and the third, but they put it away into an easy access bank account so that they could buffer the trading of the wind farm. And in doing so, they get value because they get to say that they are net zero. And that is basically the corporate decarbonisation economy that exists in this country and around the world. And hopefully that's a big lever that's going to be used to decarbonise the world. Corporate vanity. Thanks a lot.